Hello there, traders. Welcome to today's live stream. It is Tuesday, the 13th of August. Hope you've all had a good trading week so far. I'm going to go over some charts of interest as usual. We're going to go over the currency strength meter. We're going to go over the news. We're also going to take a look at some cut reports and stuff like that. So welcome to the live stream. Hope everybody is well. Let me know if you can hear me, see me. Let me know if the mic is okay. Move it a little bit more towards me. We're going to be talking a lot about the dollar this week, as all weeks. We're going to be talking a lot about the Great British Pound as well. And yeah, we're going to go from there, really. I'm not going to keep you too long today. I know we usually run for about 40 minutes or so, but we've been doing hour-long ones recently, so I'm not going to keep you that long today. But some important data has come out, so we've got to discuss that coming up. Hi, Hami. I hope you're doing well. Welcome to the live stream. I hope you had a great weekend. So let's take a look at some of this data that's come out. So not really looking at the Oz wage price index, quote unquote, at the moment. That did decline to 0.8%, but I'm not really focused on that at the moment. Big data coming out of this week from the UK, though, is something I'm looking at. Hi, Rygo. Hope you're doing well. And let's have a little look at this. Now, this was a big miss, right? And unusually, we have seen the pound rally, right? So what this means, this claimant count, that is basically people that are claiming employment benefits in the UK, okay? So it went from 36.2 thousand per month, right, or last month, to 135,000, okay? That is a really significant jump. And just to put this into a little bit of context, hi, CG, hope you're doing well. Just to put this in a little bit of context, let's have a look at the graph here, the chart. And the last time we kind of made a jump like this, I mean, there was a couple of moments where we got close to 100K in the past, March 2021 and August of 2020. We haven't really seen a jump like that since COVID. Okay, so May 2020, obviously the unemployment benefit claims went up astronomically because that was a bit of an event, wasn't it? You know, it wasn't necessarily something that was typical of the markets. So just kind of looking back over the years, I mean, I can go all the way out to sort of 2008, 2009, just to kind of have a little look. And again, 2008, when we had the crash, you know, the unemployment rate or people claiming benefits went significantly higher. And in March 2009, kind of peaked up at towards the 140K. And that is a significant move higher there on the claimant count change. But it's kind of been ignored. And the reason why it's been ignored is because the unemployment rate, so this doesn't necessarily have an impact on the unemployment rate. Let's see if I can get it up. I wonder if it was a yellow folder news. No. Let's see if it's coming up on... Here you go, unemployment rate. So the unemployment rate fell to 4.2%. Now, this is quite misleading because obviously the unemployment rate is big data. You know, we talk about it in the US quite often. But on the Forex Factory calendar, it's only listed as a low event. They take the claimant count as the red folder. I arguably would probably swap that. But anyway, unemployment rate fell to 4.2%. So quite interesting data there, quite a mixed bag. How do you get employment benefit claims go so aggressively through the roof, yet the unemployment rate declines. That's something that's quite interesting to me. So a little bit of disparity between the data points there when it comes to the UK. And we've seen pound a little bit more bullish because of it, right? Because we've had that jump in the unemployment rate. Hi, Ratish. Hope you're doing good. Hi, Vincent, as well. Welcome to the stream today. So, yeah, really interesting data. Then it comes to core PPI, okay? Big miss again. So we've had a revision down to 0.3%. It was 0.4% previously. Actual comes in at 0%. What is PPI? It is the change in the price of finished goods and services sold by producers, excluding food and energy. Again, I always kind of look at the core when it comes to this because food and energy can be quite volatile, okay? So, again, another significant piece of economic data from the US coming in a little bit poorer. So I'm focusing on dollar this week. I'm focusing on how the market is going to see the US dollar at the moment. And I like the idea of selling dollars. The reason being is because of, one, we've got the Federal Reserve potentially, it's almost certain that they're going to cut rates in September. So usually a currency will devalue in that time. So I'm looking for the continuation of this devaluation of the US dollar. Looking to maybe test 102.50 this week. I'd like to see a bit more oomph essentially on these candlesticks at the moment. We've not got a lot. Looking at the weekly chart, this is the only concern I have. The weekly chart, we had this nice rejection on the weekly. That's something I don't like to see. Usually I typically kind of take my bias from the weekly chart. And, that is a quite a nice sort of rebound. But the daily chart context as well, just kind of looking at it, not a lot of buying going on here for the US dollar at the moment. Now, where do I want to sell dollars? Well, I want to sell dollars against stronger currencies. And we'll just bring in the currency strength meter and we have a little look at what's going on here. Not a lot in the way of where you want to go long. Yen, Swiss, CAD still, yen and Swiss still quite strong currencies. But in those reversal zones still, we didn't get much change on those last week. Hi, OM. I hope you're doing well. But yeah, essentially, long, we're looking at yen, Swiss, CAD, short pound, and short US dollars. However, there's a lot of reversal pairs this week. This is what's quite interesting on the currency strength meter. There's a lot of reversal situations going on in the moment where we could start to see these currencies change. What I mean by that is New Zealand dollar has been really weak recently. However, we're starting to see an increase. So this was at -5 previously. It's gone to -3, now to 0. So the New Zealand dollar is gaining strength. Okay, so perhaps want to look at buying that. The Australian dollar, another one, -5 coming into -3. So that's starting to give us the reversal signals as well. So really speaking, Aussie and Kiwi, I could have lumped into the longs here, but I haven't because I'm still trying to work out whether this is an actual decent reversal situation. Now, you've got obviously Swiss and yen, which are still quite strong, however, at reversal areas as well. So I quite like the idea, if you're going to look at reversal plays in the market, looking at sort of Kiwi yen, okay, Kiwi Swiss, and then Aussie yen and Aussie Swiss as well. So if I was just going to build a little sort of, let's just go here and say reversal pairs, then I'd be looking at sort of New Zealand, Swiss, I'd be looking at longs, and then I'd be looking at sort of Kiwi yen, longs. But I've got caps lock on, I didn't need to hold shift then. Longs, and yeah, Aussie, Swiss, long, Aussie, yen, long as well. So you've got those kind of opportunities. Also, the pound's on here as well. Now, I've put the pound on here. Although the pound is an early reversal pair, we are at -5. Typically, when we start to see that, a market can start to reverse. So the pound is there. I didn't like the idea of buying pound this week because of all the data that was coming out. So I've left that off the list essentially. But it could still feature into being bought up. Okay. And I'd try and buy it against weaker currencies. So the likes of the US dollar, for instance, would be something I would have been interested in. But yeah, looking at the kind of currency strength and weakness sort of heat map that I produce, a lot of amber lights, right? So I give it a traffic light system. Green's good to go. So dollar CAD for me is still good to go in terms of bearish opportunities. Even from sort of a technical perspective as well, still looks good in that sense. But everything else has got an amber light. And the reason being is because it doesn't tick all my boxes that I have available to me. So I'm just kind of looking at those, if there's going to be any opportunities that could form from it. So you can see a lot of reversal opportunities within the market this week. So let's go take a look at some of these pairs. We'll take a look at cable first, because cable has rallied and is rallying, right? And if you have a little look at the weekly chart here, why is that necessarily happening? Well, 1.3 was an area we like to get short. Okay, we wanted to get short here because it was an area of resistance, and we had a commitment of trader report signal to sell. Okay, so COTS was selling up at the 1.3s. And we had a nice turnaround. We had 4 weeks of bearishness in the market here. And that was a really good move, really nice move for us. From the high down to the low, that was around 370 pips to the downside. So really nice kind of play there on pound. Now, if we're looking at it in terms of trend, the market is technically making higher highs and higher lows here, right? In the bigger picture, it's kind of range bound, but we are making those higher highs, high and lows ever since sort of the start of the year, really. If we look at sort of where 2024 kicks off, market was a little bit bearish, but then we've started to recover that move, largely down to the fact we've got a weaker US dollar as well. But looking at the weekly chart, we had this nice demand zone down through here, and the market kind of tried it once, failed, tried it again, failed as well, and the market punched higher. Now, when I see things like that, doesn't necessarily make me want to sell at the moment. So, because I've put pound in the reversal bracket, right? So it's in the reversal for opportunities now to go long on pound. I like to try and see if there's any kind of data that's matching that, to see if we get that. Now, obviously, unemployment coming in lower. Okay, so unemployment coming in lower is a positive. Okay, so that's a positive. We've got CPI coming up tomorrow, and year on year is meant to see it rise to 2.3%. So CPI rising could be positive as well. And the reason why that is a positive outcome for the pound is all to do with how this impacts what the Bank of England are going to do, right? So the BOE have cut rates recently, and they did it because the CPI level was at that target 2% level. So they had the ability to cut rates. The problem they've got now is we've got a lower unemployment rate and a CPI that's going higher. So how are they going to try and navigate this situation here? The unemployment rate coming in lower, they want. CPI coming in lower, they don't want. So what they may have to do is hold on interest rates, okay, in the next meeting. Now, if we look at, or just remember how the MPC votes went. So MPC stands for Monetary Policy Committee, and in the UK there is a vote. So there's 9 voters, okay, in the UK. And basically you have a scoring system of 0, or basically how this works is cut, okay, sorry, that's the wrong way around. It's hike, cut, hold, okay. So in the previous meeting, I'll have to double check, but I think it was 0.65. I think that's how it was how it was played out. Sorry, 0.63. Let me have a quick double check on how that played out, because I don't want to give the wrong information there on how that vote came out. So let's go back up to, when was it? It was this week here, wasn't it? High impact week, and we had, here we go, monetary policy committee bank vote. It was 0.54, sorry, 0.54. It was forecast to be 0.63. Previous was 0.27. So it was forecast that more of the monetary policy committee would vote for cutting interest rates, and that wasn't the case, right? So they actually were a little bit more hawkish in the vote, if you could say that. So yeah, that was something that was quite important. So if we think about it, what could this influence? Could this influence a stronger pound at the moment? Yeah, absolutely, right? Because you've got this whole situation here, which could lead to the Bank of England having to hold interest rates higher. Okay, so that is going to be something that we need to take into consideration. Now, looking at the 4-hour time frame, I actually saw a really nice trading pattern form yesterday. And it was this pattern that we've talked about quite a lot recently, where you get an ascending triangle, essentially, or a triangle pattern, right? You can see the triangle forming here. Very, very common trading pattern within the markets, and a very bullish one. Okay, so it's definitely a bullish pattern. And the reason why it's bullish, okay, is because the market is moving in an upward trend. Okay, now a lot of people here would try and sell, right? Thinking that this is going to be a double top pattern, right? They might think it's a double top and try and sell at the previous resistance highs. Now, what you have to look at is how the lows perform in an upward trend, right? It's all to do with the lows. Is the lows getting higher? Okay. There's a lot of talk about looking for higher highs and higher lows. That's great. Yeah, that's something I look for as well. But really speaking, it's the lows. Do the lows continue to get higher? And in the case of a sort of triangle pattern, they do, right? And what that tells you is that the sellers here have not been strong enough to push the buyers out of the way, essentially, and buyers aren't giving up. So what you have is a point of resistance, which tends to be the previous highs, as the point of where sellers can get out for break even. To get out of those sell trades, they have to buy, right? Which then influences a breakout, which then influences potential opportunities higher. Okay, that's how you get that sort of triangle pattern. That's exactly what we saw down here. Okay, now if I just delete all this and go to the hourly chart for a quick second, you'll be able to see it in a little bit more detail. Okay, and this was it at the time, so ignore kind of that price there. And this was what I was looking at. Market was finding support down at 1.27. We rallied. The market made a new low, a higher low, and a higher low, and then a breakout. Okay, so I was quite tempted yesterday to actually try and take a little long here. I didn't because I'm a bit 50-50 on the way the pound could go at the moment. I've been very bearish pound since 1.3. You know, I've been short in pound, and I've been short in pound CAD quite aggressively as well. So, you know, for me, I like the idea of seeing further downside on the pound. So I haven't actually traded anything here yet, but you can see how the market has then broken out and continue to sort of trade higher here. And it'd be interesting to see if this continues, right? You know, we're trying to break out of trend line resistance at the moment. You know, what I'd be looking for here is, do we continue the momentum? I think if we can try and breach the 128s, hold above 128s, I think that would then influence some further buying into the Great British Pound at the moment. And obviously, this is going to depend how CPI comes in. You know, does the CPI come out a lot better as well? And how does that impact prices going forward? Essentially, do you start to see the markets trying to price in the chance that the BOE won't cut rates in the next meeting? You know, that's something that's going to be watched very, very closely as well. So yeah, pound an interesting market to have a little look at the moment. If we bring back the currency strength meter, obviously dollar CAD is the one that I'm really looking at this week. I've been short a couple of times on dollar CAD, looking to see if we can get a continuation of this momentum. And again, if we look at the weekly chart, how did the weekly price close? At a very strong bearish engulfing candle here. Like the idea of continuation short here. I like the 136 handle being targets. And why did we get involved with this? You know, again, always ask yourself the question, why? Okay, now the Canadian dollar is gaining strength, right? It's not aggressively gaining strength, but it is gaining strength. And if we go to some cut data, so let this load up a second. The reason why we were looking to go long CAD was because of how the commercials are buying CAD aggressively, okay? And we're at this low here on CAD futures, which is just the inverse on US dollar CAD. We had a bullish signal here. Longs were at an extreme high that we've seen previously in the past. So I'm looking to see, can we get a continuation within that overall range? You know, the 136 handle would be these areas here, these previous sort of weekly highs. Again, flip that for dollar CAD, it's the lows. And then you're looking at these kind of areas here on dollar CAD if the long-term CAD move was going to play out. Now on dollar CAD, like I said, that's 136 and this 132 area. So I'm looking to see, do we stay in this trading range here? And do we see continuations to the downside on US dollar CAD? So I do like this market a lot. If we look at the daily chart and the 4-hour chart, everything's still pointing a little bit bearish here. The only problem we've got right now is we're just moving sideways. There's no momentum here. Now, what's that telling me? Well, it's telling me that CAD and dollars are equal in strength and weakness at the moment. Obviously, here was an area we wanted to get short. Market broke trend, rejected, higher, lower high comes in, market trades lower. We're now just stalling. Market's just stalling here. So I do like the idea of staying short on dollar CAD. But, you know, we might pull back up into the 137.50 before breaking that. Alternatively, you know, if we can get some kind of breakout to the downside here, that would be quite nice. So I'm kind of looking to see, do we have a similar sort of triangle pattern build in there maybe? And if the price breaks lower, can that be the trigger to see price kind of trade lower there, with 136 being sort of overall target? So yeah, just kind of trading the weekly rejection really of this 139, looking at to see if the weekly is going to continue to drive prices lower. Obviously, we've had some recent dollar data that's come in a little bit poorer as well. We had the PPI. Let me just go back to this week. You had core PPI coming in lower and PPI coming in lower. We've got more data now. Obviously, tomorrow is going to be a big day. We've got core CPI, CPI month on month, CPI year on year. These two here are going to be pretty big. Okay, so tomorrow is going to be a pretty big day for the US dollar. We've got a core CPI, which is forecast to come in hotter, which, I mean, if it does come in hotter, would put a lot of doubts on the idea of a Fed rate cut of 50 basis points in September, which is now kind of priced in at like 50-50 on the CME Fed Watch tool. So that would make a big significant change there. If it came in at 0.1 or lower, you know, if we got a 0.0 region on core, and we had a CPI year on year coming in, you know, like 2.9 or 2.8, then I think that's quite bearish US dollars. And I think the market may try and see this as the opportunity for a 50 basis points cut, because what the market is trying to almost price in now is the fact that the Federal Reserve are wrong, which is funny, because the Federal Reserve are the ones that make the rates, and ultimately they're kind of always wrong, right? If they cut too soon, people moan. If they cut too late, people moan. They'll never get it right from a public perception point of view. So the market's now trying to say that they're wrong because of the unemployment rate going up in the US and things like that. And obviously we had the unwinding of the carry trade as well. But there's a big chance that this could cause some more volatility within the market, and higher volatility is going to cause some pressure across the board. Now, if we look at the volatility index, this was last Monday, right? Huge move in the volatility index on Monday. Now, typically August is pretty low volatility in sort of history. August typically has a lower volatility. This was August of 2023, kind of just slowly grinded lower. And usually that's because it's sort of summertime globally, right? You know, a lot of the time it's summer, and in sort of bigger markets, they go away for the summer. So typically you see this almost removal of volatility within the market. So, yeah, typically we see a little bit of downside in that. And we are starting to recover this quite quickly. You know, it peaked up at the 65s. Now we're back down to the 19s. And that's really helping things like the stock market at the moment. If you go and have a look at US stocks right now, if we look at the weekly chart on that, nice rebound and recovery. Market looks to be moving higher here. Same for the NASDAQ, same for the Russell and the Dow as well. So nice little recoveries to these markets. We can even look across things like the DAX, the FTSE as well, having a nice little move there, and even the Nikkei. Nikkei is starting to rebound a little bit as well. So is this just a rebound though, or is it are we just seeing a retracement before a continuation? That's what it is. And I think a lot of the data this week could start to point to that. I did a piece at the start of the week called "The Calm Before the Storm." Essentially, is this CPI data tomorrow going to be something that drags volatility back higher? And if it does, what should we be looking for? Well, we should be looking to buy yen, buy Swiss, which at the moment is not necessarily a bad call, but we're not really getting an aggressive selling of dollar yen at the moment. I still quite like dollar yen downside. If we look at the sort of daily chart here, we're just in the secondary phase, right? We're in that secondary phase. The market has been moving in cycles. It's going to have a pullback. It's not just going to keep going in a straight line. So I'm watching these kind of 4-hour charts at the moment. A lot of yen pairs forming these triangle patterns. A lot of them, pretty much all of them, forming these triangle patterns. So I'm interested to see if we get breakouts and upside, or does volatility increase again, and do we see sort of continuations lower on dollar yen? Very hard markets to call at the moment. I think if you've been trading recently and you haven't had too much success over the past couple of weeks, I wouldn't be too downhearted by that, because I think that at the moment there's a lot of volatility, a lot of headline risk within the markets. I mean, even last night we had Donald Trump on Twitter with Elon Musk, and the markets didn't really react much to it, but there could have easily been a headline from that. We've got international risk at the moment. We've got potential war in Iran as well, so between Iran and Israel. So this is it's boiling. The pot is boiling at the moment, so it's going to be interesting to see if the boiling pot of volatility comes back again. Pardon the pun. So yeah, I'm interested to see how this plays out. One currency I did like for a potential reversal opportunity was Kiwi yen. The reason being is because there's a potential cut signal coming. I might be a little bit early to this though. So we have a little look back on the committed trader reports here. You can see that the Japanese yen has a 0% signal. And what we can see is that the commercial shorts increased by 53%. Okay, so they are basically selling because the yen has appreciated. Okay, so when the way I like to always talk about cut reports is if you supply and demand, in business and things like that. If there was, a chocolate bar essentially that was in short supply, you would sell it at a higher price in the shop, right? You'll get more profits from it. Now, essentially, that's how commercials work. And the easiest way is if you're, looking at gold and things like that, because gold's a physical product, right? So if the price of gold is falling, then producers and people that are in the business of gold would be buying more gold because it's cheap, right? As prices rise, they'll be selling more gold because they are taking profits essentially from those lower bought prices. That's how it will kind of works with the commitment of trader reports. Now I look at the commercials because they are hedging their risk, right? They're hedging international risk. Doesn't mean that they're right. It just means that that's all they're doing. They're hedging their risk. And this is the first sort of short signal we've had since 2020, really, where we had that sort of big turnaround, and price obviously went on a very aggressive move higher. And you can see that the short contracts in this stage were above the long contracts. We don't technically have that yet. You can see we haven't had that sort of crossover yet. But what's very interesting here is that the short contracts are at very, very high levels, at levels that we haven't seen for a while. Okay, now the highest levels we got to were sort of 2016. But even then, this is what I mean. The commitment of traders is really crap at timing things. Okay, really rubbish at timing things, because price of the Japanese yen continued to rally despite shorts going to very aggressive levels. So we have to take that into consideration, and this is what I'm looking at. Just because the commitment of traders report is showing a sort of sell signal doesn't mean that yen is going to sell off. I still feel like yen is going to strengthen a little bit more. Typically I'd like to see this crossover in terms of longs and short contracts as well, very similar to what we had here, where the market did sell off that time quite aggressively. So I'm looking for something similar again right now in the COT reports, but it doesn't mean that we can't get some short-term weakness to the Japanese yen right now. And I'm looking at seeing if that volatility play comes in. Now, if we look at the New Zealand dollar, we haven't got 100% across the board yet, but we are starting to see sort of a little bit of a move towards the buy signal here on New Zealand dollar. Now, we are already seeing a little bit of buying coming back into Kiwi at the moment after price came into those lows there. Currency strength meter also pointing out the fact that we're getting that sort of boost higher. If we have a little look at the strength meter and we have a little look, we can see that the yellow sort of gold line here is New Zealand dollar, and you can see that that's tracking higher. So that's showing us there's a reversal forming on Kiwi. So I want to be looking for currencies that are weaker, right, to trade it against. Now, one of the currencies is pound, right? So you could look at maybe pound Kiwi short. You could look at Kiwi dollar long, for instance. You could even look at sort of Kiwi yen, Kiwi Swiss. And that's why I'm kind of looking at Kiwi yen, though, because you've got 0% on the commitment of trader reports. You've got a buy signal on the commitment of trader reports, or near a buy signal. And then you look at the weekly chart, you've got a nice rebound. And looking at the price action here, you've got, I would say, a fairly bullish trading pattern forming, which is that nice little bullish triangle pattern where price could break out. Now, I'm not looking for any kind of extensive moves here. I'm looking literally towards 90.74. Reason being is because if we just whack a volume profile on it, it's around this area where the point of control is of this sort of volume zone in here. So I'm looking to see around 90.50 up to 90.75s. And around that little area there, I think is a potential for Kiwi yen to go into before either seeing a continuation of the downside, or we just see volatility fade now and the market just takes a breather and we start to see the selling of Japanese yen again. So that's what I'm kind of looking at there on Kiwi yen. But like I said, you could probably go and have a little look at sort of pound Kiwi short. This market has been moving short over the past couple of weeks. We are coming into a little bit of support here in the market, but look at the price action there. It doesn't look very bullish, does it? The market is continuing to trade lower. You've got this kind of, almost got like a head and shoulders pattern there. So if we start breaking 2.1125s, could we see continuations of pound Kiwi lower there? Just difficult with the pound this week, but you can see how strong Kiwi is. Kiwi Swiss was another one to have a little look at. That's Kiwi CAD. Kiwi Swiss was another one to have a little look at. You've almost got another reversal pattern forming here with a head and shoulders. So, could that see prices move higher a little bit? But like I said, this is really all going to depend on how the market is performs in terms of the risk element. Another market that I did quite like was EuroKiwi. Again, we've got sort of a weekly chart that's had 2 bearish closes now. Looks like we could be trading a little bit lower here, almost topping out of that range. And if you look at the 4-hour time frame, again, we have one of those nice little patterns. The market formed a base here towards 81s, and we're breaking that now. So is that going to be a sign that price is going to start, trading lower, perhaps stop losses above the swing high there, maybe try and target 78s, 77s, something like that. Could be something to just keep your eyes on in the near term, because Kiwi's looking a little bit stronger across the board, essentially. Now, like I said before, I have been short pound CAD. I'm out of those positions now. Unfortunately, didn't get the target that I wanted. So I ended up taking 2 positions on this. My most recent one was a position in here. Basically took a shot short there. And my target was 174. And price came just shy of it. Okay, so unfortunately for me, I've missed out on a lot of profit here, because what happened was price came into 174.09 and just reversed in and around that area, in and around these swing lows there, which in hindsight probably should have looked to take a bit of profit off here. But all I did was move my stop loss in above this 175.40. So instead of taking 2.5, 2.2 R out of this, I ended up taking 0.7 R out of this. But I don't necessarily think this moves over. I still like the idea of buying CAD because of the commitment of trader reports. So, just might not be against pound right now. Just I might have to wait a little bit to see what happens. We've got that sort of almost nice little consolidation here where price sort of consolidated before breaking down. So I might just look for price to come back into that area, see if it gets rejected again in the short term. But yeah, pound CAD is definitely one I still quite like. If you look at the daily chart, we're just getting sort of shallow bullish candlesticks there. So yeah, still quite like that one, but I just have to buy my time a little bit there. Let's go take a look at gold. Obviously, gold breaking into sort of highs again now, breaking that 24.50 barrier yesterday, closing at the highs. Again, look at the pattern that's forming here. Very, very bullish trading pattern, in my opinion. You've got a market that is closing at the highs, right, where we've had previous selling coming in, and you've got lows that are getting higher. Okay, so if we had another sort of breakdown here, maybe, and another sort of triangle pattern form, I'd be very much liking the idea of being a buyer of gold. But I just don't see the top in gold yet. We've discussed this quite a lot in the past. I don't see the top in gold just yet. So is it risky to buy up here, though? Potentially. If a little look at the 4-hour chart, 1-hour chart getting bought up a little bit. Yeah, that pullback just doesn't make me want to sell it, right? It doesn't make me want to sell gold right now. It's looking a lot more bullish to me than bearish. So yeah, we'll have to wait and see. We'll have to wait and see on gold. Let me know your thoughts on gold in the comment section, because it's an interesting market at the moment. Is the tensions between Iran and Israel going to give a little bit more weight to gold longs as well? Is the risk there something that's going to be monitored going forward? So that's something to just keep your eyes on. Any questions so far, guys? Quite quiet chat today. Hope you're all right. If you are enjoying the stream, hit that like. Maybe you're all taking notes. having a little look at Kiwi dollar. Kiwi dollar's very much bullish at the moment. This is why I like the idea of looking at the reversal on Kiwi at the moment. Yeah, very, very bullish here at the minute. And, things like Euro, Kiwi look pretty good. Right, guy, seems like the market doesn't have a lot of volume. Yeah, I'd agree. Typically that happens in these summer months, these summer periods. Usually goes a little bit quiet. And yeah, I'd agree with that. Ratish taking notes, nice. Just taking a look at some commodities. Let's have a quick look at oil. Oil obviously rebounded in at the lows on the weekly chart as well. Again, I just love looking at weekly levels of support and resistance. Big level down here towards the $72 on oil. Nice strong rebound here now. Same with Brent as well. Palladium starting to have a little bit of upside to it. So we're starting to see kind of commodities coming back. And again, that's a sign that the market's moving more into risk again. Go take a look and see if there's a copper chart going. Copper's still a little bit more on the bearish side of things. I think if we start seeing some bullishness in copper, I think the market's definitely going to move more back into sort of risk, which will be interesting as well. Have a quick look at Bitcoin. Yeah, even Bitcoin rebounded from this 52K area. A little pause there. And again, you typically see things like these assets, depending on how you feel about crypto and stuff. Crypto is a risky asset, right? Very, very risky. And when do you see the likes of Bitcoin and stuff rallying is because the market's happily in that risk on mode. And, I'd say we're pretty neutral. I'd say we're pretty neutral at the moment. Let's have a little look at the... let's see if I can get it up on the fear and greed index. Let's have a little look, see where we're sitting. I'd say neutral right now. Oh, it's in extreme fear. Okay, that's interesting. I thought the market was a bit more neutral at the moment. But that's quite interesting to see. So this is based off of 7 indicators, right? One of them is a market momentum indicator, and it's a 125-day moving average. So again, it just kind of gives you a little insight here. It's useful to look at the stock market levels compared to where they've been over the past few months. When the S&P 500 is above its moving or rolling average of the prior 125 trading days, that's a sign of positive momentum. But if the index is below this average, it shows investors are getting skittish. The fear and greed index uses slowing momentum as a signal for fear and growing momentum for greed. Now, that is above the 125-day moving average. So don't know how they've put that in the fear camp, whether it's because we've breached it recently and they're waiting for more data to come for that. Stock price strength. So net new 52-week highs and lows on the New York Stock Exchange. So a few big stocks can skew returns for the market. It's important to also know how many stocks are doing well versus those that are struggling. This shows the number of stocks on the New York Stock Exchange at 52-week highs compared to those of 52-week lows. When there are many more highs than lows, it's a bullish sign and signals greed. So we're not getting that either. It's just at 5% at the minute. So I guess above 5% is pretty bullish in that. Stock market breadth. That's where we're seeing extreme fear. This is the McClellan Volume Summation Index. Not heard of that before, but the market is made up of thousands of stocks, and on a given day, investors are actively buying and selling. This measures the look at the amount of volume of shares on the New York Stock Exchange that are rising compared to the number of shares that are falling. Okay, and you can see the trend of that is falling. Put on call options and the ratio. put and call options can actually be really useful. I'm actually working with somebody to have a little look at these in a little bit more depth. But options are contracts that give investors the right to buy or sell stocks, indexes, or other financial securities at an agreed upon price and date. Puts are the options to sell, while call are the options to buy. When the ratio of puts to calls is rising, it's usually a sign investors are growing more nervous. And you can see from July 11th that has been growing more. Market volatility neutral, yeah, I would say that as well, because of the VIX and where the VIX is sitting at the minute. Safe haven demand, yeah, that's going to be stuff like your yen and things like that. Okay, so the market's sitting in extreme fear at the minute, which is interesting, which means that we should be still looking for that little risk, the risk in the market to continue, really, although the VIX is down again 5.98% at the moment. So maybe this move here isn't done with, essentially. And again, what's going to drive it? All right, what's going to drive it? It's going to be this. It's going to be your fundamentals. It's going to be your data. So tomorrow is going to be a big day. So keep an eye on that. Right then, guys, I think I'm going to leave it there. Not really a lot to necessarily talk about. Obviously, we talked about some reversal opportunities coming up at the moment. We talked about potential cable long opportunities at the minute, in the short term anyway, because of the sort of data that's being produced at the moment. Kiwi is another one we're expecting a bit of a reversal on at the minute. So I think if I was going to do anything, I'd be going and trying to look for Kiwi longs. I think that looks more inviting to me at the moment. So I like stuff like Euro Kiwi shorts. Maybe look at sort of Kiwi. I mean, Kiwi CAD long looks pretty good, even though I do like the long on CAD at the moment. But again, look at that pattern that's been produced. You know, we show this over and over again. Look at that. Higher lows, base of price, breakout, market moves to the upside there. So that's something to just take into consideration. Kiwi yen I quite like as well, up into 90 spot 55. So keep an eye on it as well. So yeah, Kiwi's interesting. Yeah, I would say that's somewhere I would look this week. Right, guy, thank you as well. Thank you to everyone that joined me again. Really appreciate it. If you did like it, please leave it a thumbs up. If you're watching for the very first time, come over to YouTube, subscribe. We're nearly at 12,000 followers, I think, actually, on YouTube. So thank you to everybody that subscribed. I will speak to you all on Thursday. We'll see if this volatility mix has gained or not, and we'll go from there. So thank you to everybody that's joined. I will speak to you soon.